Hi everyone, Donna here with Bookkeeping Made Simple, and today we're going to talk about one of the things that I get asked the most, and that is commingling funds. I'm going to explain what it is and why it is advisable and how to avoid doing it. One of the top things that our clients do that has the potential to cost them a lot of trouble down the line. Before I get started, as always, if you enjoy these videos, please like, share, and subscribe. That is how I grow my channel. I'm trying to put out a lot of really good content so that you can learn about your finances and how to make them work for you. So, and I do that for free. I don't advertise the video or the podcast. So with that said, let's move on. The practice of keeping your personal funds and your business funds in one bucket, so to speak, one bank account, or using business funds to pay personal expenses, using personal funds to pay business expenses. That practice is called commingling, and it is very much not advised. What we want to do is we want to make sure that as you start your business, that you have your business bank account set up and that you are keeping those business funds separate. Now, to be fair, in the startup phase, after you have gone to the state and registered your business, there is kind of a period of time when you're going to have expenses in the startup phase that you don't have a business bank account for. In other words, you have to spend some money to register your business. After you've registered your business, then you can go to the bank with your articles of incorporation or your articles of organization and set up the bank account. In between those two items, and then you got to get money in that bank account, right? So in between those two things, there is a period of time when a lot of business owners will spend money from their personal accounts to cover business expenses, and it is expected. However, once that business bank account is up and running and has money in it, even if it doesn't have money in it, that business bank account should be used to pay your business expenses. The business expenses in the startup phase would be the expenditure of any capital that you need to spend to obtain the equipment that you need, whether it's a backhoe or a dump truck or a computer or renting an office or all of these startup costs. We want to make sure those flow through the business bank account. Well, okay, so what if you don't have enough money in your business bank account? Well, ideally, you've set up your banking so that you can transfer money fairly easily. Because especially before you start bringing revenue into your business, you are going to want to be moving money into the business account from your personal account so that you have the money that you need to get started. There's always at least a brief lag between setting up your business and getting your first customer and then getting paid for your first customer. So let's say, I'll pick a really common household name. Let's say you decided to open a McDonald's. And that tells me quite a number of things about you. One, you have to have $1 million in the bank somewhere. McDonald's won't let you open a franchise without having a certain amount of capital to back it up. You have to build the building. You have to buy the equipment that McDonald's is going to tell you need to buy. You need a grill. You need the toasters for the buns. You need deep fryers. One for filet of fish sandwiches. McDonald's was my very first out of the home job. One for the fish sandwiches, and one for the French fries, and one for nuggets. You have to have cash registers. You have to have, now they want the kiosks. to allow customers to just order on the kiosk. You have to have your credit card readers. You have to have your seating area. There's all these expenditures. You have to spend money on all of that before you can get money in the door. Then you have to buy your inventory. So you need to buy your quarter-pound patties, your the little patties are 10 patties to the pound. You have to buy your dehydrated onions and your fresh onions and your the measurer for the ketchup and the mustard. You have to have your warmers. You have to have all this stuff. You have to have this your raw ingredients before you can even begin operations. Once you begin operations, now I'm using McDonald's as an example. You throw up the golden arches and open your doors, and you're going to get business. Okay? And McDonald's as a corporation is going to be doing most of your advertising for you because it's a franchise. Now, if you're just starting your own business, like me, this is not a franchise. This is all me doing all of the work. And then getting to the point where I can hire employees. It still takes some time between your decision to go into business and the time that revenue begins to flow in. You need to have enough capital in the bank to cover that. Where I see a lot of people struggle is they will start to take out loans to cover operating expenses. Let me go back to commingling. You have to have money in the bank to cover all that. Now, once you set up, excuse me, once you set up your business and your business bank account, then you can start funneling your money out of your personal bank account, if that's where you've got it set, into your business bank account. And then all of your expenditures for the business should come out of your business bank account. If you need money for personal purposes, there's a couple of things that are critical for you to do. Number one, you have to make sure that your business liabilities and expenses are covered. And that's always really hard, especially if there's liability payments. Liability payments show up on the statement of cash flows, not on an income statement, not on a profit and loss. They're very different things. So you want to make sure you have enough money to cover all of your expenses and your liability payments. And only when those payments are made, if there's anything left over, then you can pull money out for your personal use. I recently did a video on profit first and explained why I do not like that. If you want to grow your business, you cannot do profit first. It will hamstring your business. And part of it is because, particularly in the early stages, it is important that you reinvest the funds. You make sure that your obligations are met for the business first. And that is something that through many generations of entrepreneurs in my family, that is something that's been absolutely hammered into my brain. When you have a business, the business comes first, and if there's money left over, then you can pull it out. That's where your profit comes in. So you may have heard people say something like they're really struggling to meet payroll. If you watch historical dramas, particularly about the crash of 1929, you'll hear about people committing suicide because they couldn't make payroll. That is how important these liabilities and expenses are to meet. Okay? This is critical. This is other people depend on you. So you have to meet those liability payments first and your expenses. And those are the things that you should have put in place because they were critical for you to start and grow your business. My family has been entrepreneurs forever. We didn't do, in the United States, we didn't really do the whole go to college, get a job, and work until you retire for one company. until the 50s, the 1950s. Prior to that, most people were self-employed. So prior to that, all of my family were farmers. Um, and then more recently, my grandfather was a master plumber. So he got to bring running water into the Paducah, Kentucky area, the McCartan County area, um, to a lot of people that didn't know what to do with it. The story. Um, so my family was all farmers and then tradesmen. And it wasn't until my father went to college and became an entomologist, in other words, he studied insects, that we became more of a professional trade laptop class of a family. So I'm used to it. My grandparents had an electrical and plumbing supply store. My parents had a pest control company. I've started and run several businesses. This one's the most successful. Um, all of them have been successful to some degree. This is the most successful. So this is not a new concept to me, but it may be for a lot of people, especially if you have payroll. But also, it doesn't matter if you've taken out loan payments, those have to be paid first. If you have insurance payments, those have to be made first. If you have payroll must be made on time every payday. The reason for that is now more so than in a household. Now your livelihood depends on making those liability payments, those expense payments, and your payroll, and making them on time. That's the very first thing. So I have had clients tell me, it's all my money. And so they were fine with commingling. And in fact, they were fine with pulling money out of the business that the business didn't have to offer. The problem is that mindset. It's not your money. I know it's your business, and I know you put in the seed money to get it started one way or another, but it's not actually your money. It belongs to the business, and the business has obligations that it needs to meet before it can meet any obligation to you, Mr. or Ms. Business Owner. So we don't want anything commingled. And part of the reason we also don't want anything commingled, one, it's much easier to track. If we know business money money going out of a business account is to be used for business purposes only, it's easier for the accountant to figure that out. It's much more difficult when we have someone who's going to Walmart to buy groceries for their family and they're swiping their business card, and we're kind of left going, well, I don't actually know what this is for. Is this for office supplies? Is this for other supplies? I mean, you buy anything at Walmart. Amazon is even worse. Is this for the business or is it for personal? Once we have to start asking that question, it becomes much more difficult to untangle. Now, we also want to make sure that funds are not commingled because of the legal protections. I will state up front, I am not a CPA, although I have the education of one. I am not an attorney, although I've taken a lot of classes on the law. I will say unequivocally that when you set up a limited liability company, an LLC, or a corporation, you have created an entity that is separate from you. It's kind of like having a baby. Only it's kind of like having giving birth to an 18-year-old. You have this ready-made adult. And yes, corporations and LLCs are separate legal entities from you. So they are legally a person. Okay, they can be treated as a person for purposes of the law. So when you set these entities up, especially like I said, the LLC the S Corp and the C Corp. You have now said this is completely separate from me as an individual. It is separate from me as a family. Even if you and your spouse are both on the LLC, it is not your money. Okay. The business owns that money. You are now an employee of the business that you started. Hopefully, very quickly, you are not the only employee, and you can start to be more of an administrator than a tradesman or a professional. But this is important to note. The business owns that money, not you. And we set these up so that there is what's called a corporate veil between you and your business. The reason that is so important is because if, let's say, something happens and you get sued, which is pretty common in business. I mean, for some reason, those who don't own businesses don't have any idea of the money and the effort and everything that goes into owning a business. But anyway, that's a long rant for another day. You've set this up to create a veil between you and your business. That way, if, let's say, you are sued, you can say the business is not me. It is a separate entity. If your business gets sued, which happens a lot, you can also say, these are the business funds, these are my personal assets, and never the twain shall meet. This protects you in the event of a lawsuit. So if someone sues your business, they can't take your personal car. They can't take your personal home. Those things are exempt. They can only go after the assets of the business. They can't go after your personal assets. There are very few exceptions to that. One would be if the judge feels like you got your personal assets through fraud, they could be sold for restitution. But that's honest. Let's be honest. That's fairly rare. So you want to show the court, just in case, that there is a veil between you and your business, so that your personal assets are not at risk if someone sues your business, and vice versa. If you then use your business bank account to pay for personal expenses, you have done what is legally called piercing the corporate veil. Basically, what that is you're saying in advance to the judge, in the event you're ever sued, well, hi, Mr. Judge. Hello, Your Honor. I know you have a business set up, but I have completely disregarded any separation between myself and my business. And so all of my assets are fair game now. We don't want that. We want you to stay protected. So I keep harping on this a lot. Do not pierce the corporate veil. If there's money in your bank account that is not earmarked for other reasons, and you need to pay some personal bills, you transfer that money, you basically pay yourself, and you move that money from your business account to your personal account. So that, again, in the event of a lawsuit, we need to be able to see very clearly that you paid yourself X number of dollars, and that is what you use to pay your personal bills. Again, there are times when it's understandable to commingle funds. Early in the startup process would be one time. If you actually pay cash for something, would be another time. If you're pulling dollar bills out of your wallet and it's holding money, you could then we're going to treat that specifically in your books. That's okay. Those things are fine. But you really want to have that separation. I'm trying to think if there's anything else I want to talk about on this. This is a really near and dear topic because I have seen so many people really struggle with commingling funds or with this mindset of, well, it's all my money, so I should be able to use it however I want. And I'm going to talk about that mindset in a later video. I really want to dive into that. But this one is about commingling funds. I advise you not to. Keep your business account. Keep your business funds in your business account. Keep your personal funds in your personal account. Don't intermingle them at all. And there are methods, there are processes and procedures you can put in place as a business owner that will make it easy for you to pay yourself and have access to that money for personal reasons. It's never expected, by the way, that you will never take money out of your business, but there are ways to do it that will make sure that that corporate veil is not pierced. Okay. Like I said, the number one way, what I recommend to all of my clients is transfer that money from your business account to your personal account. Make sure you mark it, because most of the time you can put a memo on the transfer, even if you're doing it electronically. Make sure you mark it as withdrew to pay for personal funds, or paying myself, because we do want to make sure that that is very clear. And then you're good to go. And then you can pay your personal expenses out of your personal account and your business expenses out of your business account. And if you're ever sued, you'll be able to show that you have maintained the business as a completely separate entity from yourself. I often say that, and maybe it's shouldn't, because I know a lot of people who have stolen from their children, but I'm not one of them. And I just kind of go back to, I wouldn't steal from my siblings. I wouldn't take money that they had, even though we're family. I wouldn't do it to my children. I wouldn't take money that they have and just spend it. And you need to have the same attitude towards your business. You're not going to just spend the business money out of the business account. There is a process for that. You move that to your personal account and spend it for that. Now, what about credit cards? Most people do get the bank account thing, okay? But what about credit cards? I got this great credit card with great rewards and I want to use it for my business. You can do that. Make sure, however, that that credit card is used only for business. And I also very strongly suggest that you get your Duns and Bradstreet number, your DUNS number, and start building credit for your business completely separate from yourself. If you'll do that, then it also continues to reinforce this attitude that the business has rights and obligations that you also have, but they're not the same. They're individual entities, just like a sibling, just like a spouse, just like a child, just like a cousin. And just because the business has money, even though, yes, I know you run the business, it's your money. Even though the business has money does not necessarily mean that you have money or credit. If you are not good with money, entrepreneurship is not for you. Entrepreneurship is for a very small group of people who are good with money, who are willing to be disciplined, who are willing to put in the work, and who understand just how hard it is. And I'm going to also go into that in a later video. So that's what I have to say about commingling funds. And as always, have a great day, and I will talk to you again soon.